All right, all right, all right, all right. It's today, Monday, the 20th, 20th March. It's 7:30 GMT +1, in case you're interested. And I didn't look at the chart since last, last, um, last, last Thursday. So it's gonna be interesting. It's gonna be fun. Looking forward to it. Got a lot to discuss, got a lot to speak about. This was last Monday. It's the only trade I caught this short, targeting this area. Got some trend line liquidity building up over here. We had some trend line over here that was taken out. By taking it out, we took the previous weekly low. So that can go as well. I don't know why there are two arrows. You only need one. Bearish break. This is a bearish range. Previous daily high is taken. This is our most recent area of supply. Sound. My laptop is gonna make sounds again because of the yeah. All right, so that's taken then. That was previous weekly high. That's taken out. Let me turn around. Let's keep that on. So that. So we set the trend line. That's taken. Bearish break. Wick breaks though. Wick breaks. Look, wick breaks. 4 hour wick break. 1 hour wick break. Even 30-minute. Just about closure below, not strong. Immediately turn around after that. Not really, maybe 15-minute. So clean long. This wasn't during New York. This is the only trade I saw. You can see, got the building up. Actually, we'll discuss this trade first, and then I'm gonna do like the recap of today and what happened. So for this trade, we can see we took the lows. We got this area of demand. What happened is we took previous weekly lows, got a swing up, swing down, taking out this liquidity. So it's like a liquidity grab, followed by a bullish break, creating this 50-minute area of demand. Price didn't tap into the 50% of the demand, but uh, we knew that like okay, we took up this higher time frame area of liquidity. We also knew that we were inside this range from up this high down to this low. And we knew that we didn't reach discount or premium yet for that range. So we want to buy into that premium, right? That's like the basic understanding of it. Then also knowing that price needs to engineer more liquidity before coming down. So what we can see here, that's what we can see right now. We couldn't see that before. So we have this trend line now building up. So we either might react from this area or take out these highs over here and then continue down, because this previous daily high over here is now a previous weekly high. Let's mark that on as well. Wednesday, yeah, so that's our previous weekly high. And we got this bullish break. So 1 second. There's someone at the door. All right, so we got this trend line over here. All right, so what's this? This is Asia high, I think. Oh, this is real Asia high. This was the fake Asia high, so let's take this one. All right. Okay. So what happened? We broke structure, and we can immediately see that if you go to the 50-minute, we can see the price create these equals here. We can see that wick, then we can see the Asia low. Asia low takes out these lows, but if we go even a time from lower, on the 5-minute, we can see that like from this wick, we got the range. It's price start ranging. Then we got Asia low being formed. You can see that after we took out this high over here, price gave us our early sellers over here. So we broke structure bearish, continued up, Asia high was here, but sorry. This high is not a significant high because it didn't break any structure whatsoever. You can see over here we got lows taken over here. Asia low took this low, then broke this high. So that's the bullish break. And then here we have our fake breakout. So this is a real Asia high. That's my rules for deciding where Asia high and low is. We take that out, and then we react from this 5-minute POI over here. Oh, sorry, over here. And good thing is that this is like a support and resistance area, kind of. If you can see over here. Let me pull it across. Maybe you can see a little bit. Let's go to the 50-minute. It's more visible. See? You can see where all these levels react from. This one, especially this one, and then this one, and then this one. And if you just pull that across and make it like a box. Sorry, let me actually visualize it. So like this. See, this is a quite decent support and resistance area, right? Actually, I was marking it. I was pointing out the wrong highs. But this one, big move, reaction, rejection, reaction here. So anyway, that's something you could use as well. But price reacted from the area. Does it matter? Yeah, because this is our London swing. So we always want to know where our London swing comes from and what liquidity took and why it reacted from this area. Because London is my main trading my trading session, so I want to know everything that happens in London. I want to know the reasons why things happen in London. You want to know, yeah, you want to know everything. So we reacted from that 5-minute PY. Nice, nice. This 5-minute PY up there. Came back down. You can see the liquidity building up over here as well. Slow down. Then this is pre-New York. Price is slowing down. Price comes down. And then I think this is on the back of news. You can see over here, we got our tap into the 5-minute or 50-minute demand area. Oh, sorry. After that, we got the 5-minute market structure shift, 5-minute shift, 5-minute break of structure, whatever you want to call it. You got a change. So let's leave it. Let's put on the breathing room. I marked this out on my phone, so it's not like to a T. I want it to a T. There we go. So we give it some breathing room. Oh, hold up. Let me actually do it like this. 1, 2, 3, 4, 5. And then on the entry side, we want 1 pip. So we got 41. So that's my entry. And you target at least at 1 to 3. This is a huge stop. Stop. It's a huge stop. I don't know if I would take this like this. It's in New York anyway, but that's the reason for the trade. I don't know what this line is. Oh, that's the overall range, right? So we got the low up to this high, never reached discount, coming to the discount, coming to the 550 into the 50-minute demand, give us a 5-minute market shift, break of structure, whatever you want to call it. It's a wick shift or a wick break, but wick break is all right because it's on the 5-minute, and then you get your entry. Could you refine that entry? Yeah, I think there's a confirmation based entry as well. Yeah, so there's not really like your early buyers or anything. We step in here, and you could actually just enter like this. Hold up 1 second. Let's go into replay mode. Let's go to the 3-minute. So that's everything's mitigated over there. But you can see we tap into this kind of a 5-minute range. Then price creates another break of structure over here. And over here as well. I will probably wait for that one. And then we react from this 1-minute block. It sits over here. The reason for Like this is the decisional one that breaks the structure. So you could take it like that. There's not really a block here that grabs liquidity. So this liquidity is just taken, but there's not like a demand area. But liquidity. Oh, come on. Whoa. Why? Focal, right? Time frame. Welcome to the 14-minute chart. There you go. So yeah, there. And now let's go back. There's like confirmation based trade. Is there also a 5-minute POI for using the other entry drill? No, because everything is mitigated. So that's a bit of a thing. Maybe there's a 50-minute one. So you can use this 50-minute one. Then this is your 50-minute market structure shift. Market structure break structure. I don't like market structure shift. It sounds shit. I don't know why I'm using that. Watching too much ICT and other stuff. So yeah, and then we got that break, and that's where the long trade came from. Ideally, you go break even after you price comes, or that's what I do. As soon as price comes into that premium, I go break even. No need for partials because you're in it to win it. So let it play out at least 1 to 3, which gets hit in the new week. So you have to keep it overnight. Therefore, you need a swing account. So definitely recommend getting swing accounts if you do that, or don't, or close on Friday. It's on you. Should that happen then? Now let's dig into the charts further. Because now we have this low. Never reached discount, never reached discount. So we never reached discount after that, but you can see making new ranges over here as well. Got a 50-minute demand area over here. So this is the block that took the liquidity instead of taking the order block. I find it better to do it that way. And that's me. That's not you. If you want to do this, you have to test it first. That's what I did. And I still have to test more. But basically, this is the last leg that provides us with the break structure over here. What we also can see is London swing getting formed by tapping into that. Then we want to know, like, why does it react from that? We don't need this one. Let me remove that one. We do this one. Zoom out one more time. What is this? It's a range. Oh, yeah, it should be. What's wrong with that? And now let's break price down monthly. So yeah, there was this was February, closed pretty strong. We know where we are on the high tariff, but we're gonna go over it again. Where's my notes? There you go. So, I have like 7 or 8 points, and you can literally apply that for all time frames, and then you know You can form a bias based on that. And point one is like, let me actually write it down. Maybe it's useful. So one is structure plus ranges. And that's like your high time frame structure plus ranges. So this is like for every time frame you do it. Then your second thing is a bias that is based on these structure ranges. Bias based on the structure actually, but also on the ranges. So then after that you get tree, and let's you point out your liquidity. I want you to point out your liquidity. You're gonna make a bias based on the liquidity. And after you've done that, you're gonna look at your high time frame candles. Actually, just candle formation, like formation. So this can be wicks, closures, maybe even gaps. I don't know. I think it's like the brand. It's like this. No, it's like this. Gaps. Then 6 is you're gonna look at price behavior. And maybe even like this, you can already do this like over here, but you wanna now you have all that knowledge. You went over all that. You're gonna look, are there any fake ranges maybe? Because I might think that we would take out this previous weekly high over here. Look at how that closed, and now we took previous weekly lows. We might now take the highs again, and then turn around, and then 8. This is just like for me to go over these recaps is, are there any the lower time frame trades? So yeah, the lower time frame trades both ways. So this is how you can do your recap for yourself. Go over these points. I mean, there you go. So you're structuring your ranges. So let's start with that. Structure ranges. On the weekly, we have this bear structure over here. From this high down to this low. And we know that we reached discount of that range. And we came into our weekly PY over here. So the highest probability, aka our bias, is the bias second point is that we're gonna go short now. Why short? Well, if we point out our liquidity, we got liquidity building up over here. We got internal range liquidity taken over here. We got more liquidity over here. So from maybe from a weekly time frame or weekly perspective, it's not to say that we're going down yet because there's much more liquidity to take, and this is just the first time we reach into the discount or into the premium. But yeah, so then you go to the candle formations now, and then we want to focus on our most recent candle formations. We can see the market is quite indecisive. After we push down here, we got some rejections or like correctional waves candles up. It's not showing us any bullish intent, neither bearish intent. Same with this one. Yeah, so fake ranges, then we go to the daily actually because the weekly is way too high up. We got our weekly structures over here. Now we can see the liquidity. We can see our bullish break. So we got a bullish range from this low up to this high. We never reached discount for that bullish range yet. We took out liquidity to the left, so we can now take out internal range liquidity for a bullish range, and maybe come below this low over here, and then you can see price maybe react from our daily demand area over here. If that is a demand area, I'm not sure. Actually, it should be this one then. Gotta ask that. Or we can break bearish because we got nice liquidity building up over here. However, this range has nice internal range liquidity in the form of these lows over here. So there's no need maybe to take up these lows, and we can see price coming up higher before turning around. If this is the case, we get a fake range and we take out these lows first, then see price taking out these highs after, because the dollar is shit. Yeah, of course. So can we get this on the day as well? And then get this visible. Then liquidity wise, you get this low. You know that this range didn't have a lot of internal range liquidity. Therefore, we were targeting this low. You can see last week pushed out pretty aggressively. But by pushing down that aggressively, we don't leave any liquidity to take internally. So if you go down lower now, actually you can just use this for yourself. I use it. I prefer it story wise now. So you can see there's not much internal range liquidity for this range. So we might take out the highs first, which is our previous weekly high right now. We might take that out first, and then we can see price turn around. Daily wick below and close above previous weekly high. Demand, I don't know. Oh shit. So I can take that out. Got this 15-minute PY. All right, now we still didn't reach the discount or the premium of this range over here. Then yes, this was like a beautiful liquidity pool that's been taken out. Then we got the turnaround, so it is good like area, especially because it also reacted from this 50-minute PY. We got an Asia high above here. Asia low has been taken. So let's dive into today, Monday. So you can see we have this new weekly open gap, which has been filled instantly during Asia. Then we got our Asia high over here, which is a valid high. Why? We took out these highs and then turned around. So it's a strong high actually as well. We got our Asia low, nice swing area. We got a nice movement from the area, so it's good, like good low, strong low. We also react from that PY over here. And then coming into London, you can see we had some liquidity building up over here, and we can actually go down into the 1 minute instantly because we can see that on the 5 minute there's not much where price could react from. And we can actually see that we came below this low over here. And we turn around. And that's our London swing then. And why is this our London swing? Well, we got our like fake buy over here. We got actually, yeah. So that's our early buyers. 5 minute early buyers. Oh, line, text, TV, bottom, middle. So we got early buyers over here. They've been taken out. Then we got the break over here. We got our another break over here, but essentially there's no entry for us. Not on a 1 minute, not on a 5 minute, nothing. You see, we built up more liquidity over here than we react from this thingy here. It's not nothing there. So why did we now have a reason for why our London swing is formed here? One, because of this key area maybe, but more especially and more important for us is that it is formed because of this 50-minute demand over there. Let me go down one more time. So there's actually 1 minute entry, but it's super intricate. And let me go to my rules. Motion, trading strategies, supply and demand. So 50-minute, no. So I need multiple 1 minute. For me, it needs to come below this 50% for a 1 minute entry, or it needs like 1, 2, And here, the third one, this is too intricate, by the way, but this one will be your first break, actually, from this one. That will be your first break. Then you have your area over here, plus 1 pip, so it will be 55, 65. So you want to get tagged either just below, above, but there's no trade, so just ignore that. Then your next break is from there. I don't think we reach any discount on the bullish break. Actually, just about. So in case you class that as your break, this would be your. I would never take this one. I would have taken this one, and that would have caused me to miss a trade, but it's right. Again, this is lately we got these huge areas. Same here, but this trade over here that I explained earlier. That's a huge area. The same with this one. You then, if you take this one as your break, then you should also take this one as your entry area, and then you got to tuck it on. Let me just like that. Oh no, 50%. Your long trade would be from this one 90, 500. So then you would be tagged in. You would have had like a 20 something stop loss. I'm sorry, should be was 12. So it should be 7. We left the breathing room over there. And then you still if your target Asia high, and you can easily target 1 to 4. 1 to 4 was play out quite a lot. You take 50% at your 1 to 4, or 80% at your 1 to 4, then you target that high and take your final partials over there. So that's for New York, for London. Let's just do it like that, just so we can see it. I don't know about this area, man. It can hold because there's everyone wants to go down, but the dollar sucks. So why do we want to go down? It fits the technicals. I don't know if it fits the fundamentals, so I haven't actually looked at this today. I thought I could filter. Oh, there. FOMC again. All right, party hard. So tomorrow is a good trading day. If you want to trade, then Wednesday you want to not trade during New York. Thursday you can trade. You just wait for the unemployment claims and you can trade. And Friday you can trade as well. There's news. There's like red news, but it's good. Good red news. It's all right. I might stay out of the market Friday morning, meaning that I have off Friday. Oh, nice. Study more. So yeah. So there's not much news, or there's enough news, but it's not like big. What makes this a good area is that like that's the thing. It took out these highs, these perfect equals that cause a trend line to break. So that's why it might hold. But then this will be your internal range liquidity. Ideally, if you want this to turn around, you want to either come above here. So let's actually mark that out. It will be high probability to take out this liquidity. Oops. Take out this liquidity, maybe. And give us a sweep and then turn around. Let's actually go to the weekly and see where if I have the weekly levels right. Yeah, so that's my previous weekly high. And this is my previous weekly low. And on the daily, this we don't know yet, but this will be my previous daily low. And yeah. Look at this. Look at the it's still strong close though. It's still a strong close, but and wick. Just wick and turn around. Not even a large wick, just wick and gone. Then turn around, followed by three bullish candles. Nice open gap over here. Yeah. So yeah, then we can look for New York, because New York, actually, let's just break down and see what happens during New York. So we tap into that 1 hour demand, supply area. This will be an intricate break. And if you go lower, I think it's even better. Yeah, that's a nice trade, actually. So you get some early sellers over here, or this one, but this one is just reacting. So there's not really any early sellers, but you can see that you got a shift over here. I think that 1, 2. Then over here to get the third one, but it's not important. And then we react from this 1 minute area of supply. That's where the short comes from, and then it comes off here already. It's not really interesting. It's not necessary. So that's where your short comes from. Then New York, you would have to class this as your early sellers. No, it's not clean, man. This is not what you want to see, right? So there's a trade. It's not the clean. So, all right. We could class this year, December still taking out these lows, but then respecting this order flow. Then and then see my 5 minute. Yeah, yeah. All right. So bit hard to see in the 5 minute. Like this is swing, it's not clean. Plus, you can see over here we're reacting to respecting this 5 minute fair value gap as well. So price might just continue up. That's what I'm expecting for tomorrow, really. I expect price to hopefully stay in this area. This will be previous weekly highs, previous daily highs. Then Asia takes out that high, then we take out Asia high, then we can look for short. So yeah, that's it, man. That's the recap slash little surgery. Not that much, but just a little. I love to break down London. I hate breaking down New York. It's near as shit. It's messy, in my opinion. People like to trade it. I know. Actually, let's mark on this. And then this. And we got liquidity just above the 50%, and we got then a nice PY sitting over here, so we can look for 1 minute entry maybe from there. That would be completely valid as well. Minute PY. There you go. Alrighty. So that's the breakdown. That's the recap. That's whatever it is. It is what it is. We got this range for now. We're working. You can look for longs as well from the discount of this bullish range. Why? Because we might see price take out the highs. So let's mark it like this for now. And if we would do something, then we would look for trades from this is our 50-minute demand area. And the thing is, we don't have any real liquidity sitting over here. So we got some liquidity over here. So ideally, we want to see price come below that before we look for the longs. But price might do whatever it wants. So this is just the ideal scenario. And we also have a beautiful 50-minute POI sitting over there. So let's see. Actually, in this is all right, yeah. So that's it. And look for longs from this area. This is a 15. Come on. And we can look for shorts maybe above this liquidity. But with previous weekly highs above, quite risky, isn't it? We'll see. If the entry represents, we gotta take it. And we know why we lost if it goes up, and we know why we won when it goes down, because it took that liquidity and it wasn't enough. But I don't know. All right, peace out.